Alright, so on to our balance sheet for December 16. Standard balance sheet layout, 3 columns, cost accumulated depreciation, net book value for your fixed assets. Your fixed assets here are buildings, equipment, and furniture. Cost then, buildings 600, but I bought 150's worth during the year, so that's 750,000. Equipment 80,000, no additions or disposals. Furniture 40 at the start, take away 20 is 20, plus 12 here is 32,000 for cost. You could put it in as a working, or you could put it in as brackets here if you want. Accumulated depreciation then I have calculated. So at the start of the year for buildings it was 36, plus the 14,250 for this period is 50,250. Equipment 48 at the start of the period, plus another 16 is 64,000. And furniture then, so 24 at the start of the period, plus 6,400 for the period, but take away 12 grand accumulated depreciation on the disposal. So that asset's gone, so you shouldn't be carrying the depreciation anymore. So 24 plus 6,400 is 30,400. To take away this 12 is 18,400. So net book value for the buildings then is 699,750. For the equipment is 16,000. For the furniture 13,600. Just add those up, so 862 for cost, 132,650 for accumulated depreciation, 729,350 for net book value. So that's your tangible fixed assets. And I'll put in then financial fixed asset, and that's my investments, and I worked those out as being worth 90,000 euro. I'd have to work back to them, they were left off the list of assets and liabilities at the start of the question. So that's 90,000. So your total for tangible fixed assets, so should we call them tangible fixed assets, and financial fixed assets is 819,350. And then on to current assets. So current assets, the bank balance at the end of the period, so 3,300 on this side. Balance CD means your balance brought down will be brought down onto the opposite side. Okay, so that is like a debit balance, that is a current asset balance. Okay, so if they have to put the balance of vigor in on that side, that means when they bring it down, it's going to be on this side. So 3,300 there would be a current asset, but I've got a little note beside it that I adjusted in part 5 because there was some items not included in that 3,300. So there was bank charges, so I need to take that 110 away. So current assets, bank is 3,300 in the receipts and payments. Take away this 110 that wasn't included for bank charges, and then take away 950 for a dishonoured check. So I assumed I'd got that check, but it bounced, so my bank balance will be lower than I thought, and that will be 2240. Right, other current assets then, the shop stock. So closing stock for your shop is 1,800. closing stock of heating oil is 400. Cleaning prepaid of 600. The members fees in arrears or members fees due 2700 here, but I just have a note that there's another 950 that onto that, so 2700 plus 950, so that's 3650. So 2700 plus another 950 then I got, so added together is 3650. Members fees due, and then I think that is it for current assets. Yeah, if you add the 5 of those together, you're going to get 8690. Current liabilities or creditors, so less creditors due within 1 year. The members fees for the following, yeah, so the members fees prepaid 4,200. Wages due at the end of the period 1,800. And then I had creditors for supplies 3,600. And I think that is it for current liabilities. So add the 3 of those together and it's 9,600. So your net current assets, so net current liabilities, because it's less and it's negative, so that's 910. So the 819 take away the 910 is 818440. And then I'm going to do finance by. So that is financed by share capital and reserves, and I'm gonna have, remember, the share capital is broken down between authorized and issued. So the authorized was 500 and the issued was 350. And that was authorized issued share capital, so just that'll be ordinary shares. And then remember I said it's the reserves, so profit and loss balance, or else the reserves on the 31st to the 12th that I bring in. So that is at the bottom of your income and expenditure account. Okay. The 468,440. So remember I was saying that we bring in this number here rather than bringing in the reserves at the start of the period and the excess income separately. I add them together at the bottom of the income and expenditure account, and it's that number that I bring into the finance by. And if you add the 2 of those, you're going to get 818440. So my balance sheet balances.